How you doing, everyone? Welcome back to Mortgage Mind. This is Martin Mesa with Rate One Financial, and today we're talking about the FHA Section 8 disaster loan. Okay, so many of you may know I'm in Southern California, specifically Sierra Madre, very close to the recent wildfires that devastated the city of Altadena here in Southern California. Very unfortunate incident. We're still dealing with it. We'll be dealing with it for a long time. Many people lost their homes. It's really unbelievably terrible situation, but we'll get through it. Um, but anyway, there's a program called FHA. It's an FHA loan program, which, if you don't know, is a very popular loan program in America that benefits a lot of people that don't have a lot of money for down payment, especially first-time home buyers. But there's a subsection of the FHA loan program called the Section 8 program, which is a disaster loan, they call it. And what it does is it provides financing. It makes it easier to finance the purchase of a new home after your old home has been destroyed and is uninhabitable due to a federally declared natural disaster, like a wildfire, an earthquake, or something like that. And in order to be eligible, it's just like any other FHA loan program. You still have to qualify based on your credit profile. But the good thing about it is um, you don't have to have a down payment in order to use that loan to buy a new home to live in. There are, loan amount limits and sales price limits and so forth. Well, there's loan amount limits based on the county the property you're buying is in. But as long as the sales price of the property you're buying is at or below the county loan limit, for that county, you could potentially get a loan for 100% financing or 100% of the sales price, meaning no down payment, which is nice for people that are cash strapped after a situation like this. And as the other great thing about it is, as long as the old property that got destroyed, as long as you can show that you are in good communications with the insurance company and the mortgage loan, if there was a mortgage loan on that old property, mortgage loan servicer, then you're working with them in certain ways to make sure that that property is going to get rebuilt and that the mortgage is in good standing there. You actually don't get hit with that other mortgage debt from the old property, which usually is why it's very difficult to get a new loan on a new property when you still have a loan pending on another property, because you have to make pretty much double the money in order to qualify for both mortgage payments, which many people can't do. So this program allows you to eliminate that mortgage payment in terms of qualifying for the new loan, which makes it a lot more feasible for most people to be able to qualify for this FHA loan to buy a new home. And again, there's no down payment. So it's great because a lot of people got to sell their old home to get a down payment to buy the new home. But in this case, how are you going to sell it when it's, in the situation it is? So it's a great program. If you know someone or if you yourself could use this program, if you've been in this unfortunate incident, I would definitely recommend talking to a lender. You talk to your local lender, or give me a call, give us a call, and we can definitely explain it a little bit more to see if you might be eligible or someone you know might be eligible to take advantage of this program to buy a new replacement property if you're not too keen on renting in the time being until your old property gets rebuilt. So anyway, hopefully that helps explain a little bit about how that program works and how it can benefit people. And again, give us a call if you want some more information. We'd be happy to help. So take care, and we'll see you on the next episode of Mortgage Mind. Hey guys, if you guys like what we're doing, please like and share this video.